You're watching TBPN. We are live from the Temple of Technology, the Fortress of Finance, the capital of capital. Today is Tuesday, March 4th, 2025. And guess what? We have a guest at the opening of the show, Eric Glyman, CEO of Ramp. We're very excited for you to be here. Thank you. Welcome to the show.
Awesome to see you, and great to be in this holy place today.
Yes, yeah. The dojo of the dollar, the shrine of shareholder value. It has many names. But most importantly, it is our humble abode as the host. And it is where we host.
And it should feel like home to you, considering that I have this massive, sort of Ramp logo over my head here. So, home away from home on the air. It's amazing to have you. How's this week been so far? Obviously a busy one with the news yesterday, but from what we understand, it was old news to you. But I'm sure it feels great to get it out in the world.
It's incredibly exciting, and look, like most days as a founder, it's you in an office taking calls, waking up early, staying up late. It's just a lot of constant work, and it was one of those rare moments I think when customers, partners, the team could all celebrate just a little bit, enjoy, and then kind of get back to it. And so it's pretty overwhelming, really exciting, and feel lucky to be here.
Talk about the pressure of raising in the sort of height of ZIRP. You guys raised at an $8-ish billion valuation. Then you had to sort of reorient the team around. Obviously, the business performance was still fantastic, but many people were saying publicly that generally a lot of these unicorns may not ever sort of achieve that sort of peak valuation. How good does it feel to not only achieve it again but exceed it dramatically? And what did you have to do to kind of like motivate and rally the team in those sort of like the darker days where, again, the sort of public narrative was that, these valuations were never really real. So how good does it feel at this moment?
I think someone really has to do just like a deep, in-depth piece of like the big comeback and building up from like these 2021 companies and what it took, because there really were companies that would raise at 100x revenue multiples. I don't think it was a sin necessarily to raise at high prices. I think probably the sin was just spending it all really quickly. You look at a lot of the companies that have transformed their industries, Amazon, Google, Apple, like you name it. Often started with some kind of bubble or hysteria. People were investing a lot in it. I think it does interesting things to businesses. I can tell you that our mission has been very consistent. Start a business that is obsessed with saving our customers time and money, help them have every dollar an hour that they're spending in their business go a lot further. And when you have a large amount of capital behind you, you, of course, think about what are the results that you produce next week, but you start obsessing over, could I make this outcome 10 years from now larger? Instead of taking that next marginal dollar and I'm keeping it, how do we put it back into the hands of customers, see them succeed, have the ability to use that next dollar to invest in faster growth and in a weird way, grow a much larger business for them 10 years from now, and we hope a much larger one for us. And so I actually think it created the conditions for Ramp to not just be customer obsessed, but to take that to a whole nother level. I would say is one of those 2021 companies. We certainly had a lot of work to do to grow, but if you keep I think in 2022 it was public the revenue 4x that year. If you keep doubling, if you keep growing at incredible rates, what are very large multiples suddenly become very reasonable. And I think that the interesting thing that happened since is these it all met, and now Ramp is not only trading strongly performing public traded companies, just growing at a dramatically faster clip. It's driving more savings and more value for customers. And the most remarkable thing is it's such a large market. I think if we do our jobs right, we tend to save our customers more and grow just as fast, if not faster. So
I remember you telling me that one of the things you did for the employees was actually during the all hands, during kind of the turmoil of the interest rate rise, you actually walked the team, everyone on the team, regardless of their role in investor relations or not, through how valuations are calculated, where ramp is, the growth rates, the metrics, and kind of did a bottom-up analysis, not like a full DCF or anything, but you walk people through that. Do you think that's something that's unique about ramp culture, or do you think more startup CEOs or scale up CEOs should be transparent at that level with their employees about how, because there's a lot of companies out there right now that are just like, hey, yeah, we're worth $20 billion because I got one guy to write me a check at 20 billion, right? They bought $1 million worth of stock at 20 billion. Whereas I think you said, hey, look, there's a whole host of people around the table that agree on this valuation now. We just repriced it in the new interest rate regime. And here's all the multiples. Here's what it would look like if we were public, et cetera. Walk me through that.
So start with maybe this and think about this, where if you're a new employer, you're considering coming to Ramp, there's sort of two, ish ends of the deal just from a comp perspective. One was cash. People can agree on, base bonus, that kind of structure, and what's the equity value? Maybe that you get a package worth 100,000, $500,000, something like that. And traditionally, when this is done, we say, okay, this is granted, this is based on this valuation. So we believe that the stock today is worth, if you stay for 4 years, it will be worth $500,000. And if it grows from there, it'll be worth more. The problem that all these companies had in 2022, 2023, when publicly traded tech companies, in some cases, were down 70%, some were down 90, others were down 30, is no one quite knew. And for an opaque private company, suddenly the bid-ask spreads could be very, very wide. And during all this, I mean, we were growing incredibly quickly. Like that 2022 years, we grew 4 times year over year. No other publicly traded company was doing that. And so I think part of the problem that we were trying to solve was, we were very lean, we weren't burning a whole lot, didn't have a capital need. But I wanted to be able to look employees in the eye and say, when we make a grant and we say this is a $500,000 grant as of the day that you're joining, we really believe it. And it's not just us, but other sophisticated investors have done it. And so we did what was a very unusual thing at the time, which was, we just went out to the market and said, we just want to know where you would price this, what's fair. And investors said, we have more conviction than ever. In December 2021, we valued Ramp at $8.1 billion. Today, we actually think it's going to be a way bigger company, and the value is $5.8 billion. And we said, great, let's do it. And the interesting part is mathematically, if you go through to your point, John, like a DCF, discounted cash flow, one of the biggest drivers of what's the end valuation is what are all the profits you'll make in 10 years plus. And it's impacted by what is the risk-free rate, the overnight rate you can get. In December 2021, that rate was almost 0%. You would get no reward for risk. In 2022, the risk-free rate was like 5 to 5.5%. And if you compound that over 10 years, it has a dramatic effect. And so in a weird way, the 5.8, if you kind of go through the math, the $5.8 billion valuation first, it lowers the share price today, but it implies a much higher share price later on.
Of course.
So I guess to back into it, I still think a lot of companies haven't taken their medicine. They actually haven't just marked it to market. And I think that a lot of employees who've been working hard probably are still underwater. And we didn't think this was right. We rather would just say, here's where the stock is. Come in today through hard work and focus, customer obsession. Let's build from here. And I think that proved really well. We're back above all-time highs. We have a lot of momentum. And I think for people who joined the team and part of the mission, I think people have been treated really fairly. And so I don't know, I hope that's helpful in just how we thought about it.
Yeah, I have a question around Ramp truly lives the Ramp way. Like the approach to company building that you guys advertise, you do exactly yourself, right? So I feel like you're in a position, like looking at Ramp's capital efficiency, which I think was published, yesterday, around your guys' sort of net burn. It's really astonishing, right? And it's got to be, if you're running a business, at anywhere in the same category, even adjacent categories, you have to be highly concerned at the rate that you guys are growing in that context. Is that, how much of that do you credit to Ramp versus yourself and your team's operational abilities?
I think our whole mission right? To your point is like make the most of every dollar and every hour. If you're spending it, you should know why. And it's not just that you're spending it in one place, but what actually generates the return, what connects to growth. And I would say that we certainly benefit a lot from our own product. We try to be obsessive over making sure we're not wasting, and if we're spending on software licenses a product, we buy 500 seats. We want 500 people to use it, and we use Ramp to cut out extra licenses. We look and make sure we're getting the most impact for prices and software that we're buying. And I just think for the same reason, a lot of the highest performing, best running companies on the planet run on Ramp and use it. We do too. We want to be the best customer of our own product, and so some of it's that. But I'd also say if your whole mission is to obsess over getting, your customers the most from every dollar an hour. As long as you're not a big hypocrite, you start thinking about it for yourself too. And so I would give credit to the team. I just think that the rigor, not just financially, but even just from a, engineering perspective, design perspective, I think most organizations could not have put out a Super Bowl ad from, 11 days start to airing.
I think we were one of the few groups that had direct insight into that because
Yeah.
I remember we talked to the team. We have a sort of a weekly with the Ramp marketing team, and we talked to them, and they basically were like, "Hey, we got to go dark for like 3 days," and so we got to witness the process, and it was incredible to see. In this moment, to me, it feels like Ramp's opportunity, like the value proposition for Ramp has never been stronger, right? You were born in 2019. You very quickly were in the zero interest rate era where it was not cool to save money. It was cool to spend it and grow as fast as humanly possible. And we're now entering this period where, we have tariffs, there's austerity in the government, right? It seems that, saving money and making dollars go further is in. How are you thinking of, taking Ramp out of, Ramp is the Super Bowl felt like this first moment where Ramp was going mainstream, right? Mm-hmm. And, what does that look like over the next like couple years in terms of, getting, there's many more businesses that aren't on Ramp than are. What does the next 2 years look like in terms of going mainstream?
Two things. I mean, there's something just timeless about Ramp's core ideas. I think to paraphrase, Jeff Bezos when he was talking about Amazon, he couldn't imagine 10 years in the future people would ever, say, Jeff, I love Amazon, but I wish the prices were higher. I just wish that, these packages got to my door a little bit slower. You couldn't imagine it. People always want lower prices, and getting things earlier, getting more done with less effort. And in some ways, we just took this simple idea very seriously. For a business owner, in the US, average profit margin is 8.5%. It means a dollar saved is not equivalent to a dollar earned.
Right.
A dollar of cost that you cut is equivalent to increasing your revenue by $12. And I just think that we, looked at the math and just took it seriously. And I think that simple truths in some sense are one of the most powerful forces in business. Uh, when I look at where we are, it is incredible to be serving, empowering what we believe is 1 to 2% of all corporate and small business card spend in the U.S., which is maybe the market that we're largest in. It's 98 to 99% to go. I think part of going mainstream.
You did the meme. You did the 1%. You did the 1%
yeah.
of the TAM.
If we just take 1% of this thing, it will be a big company. And you did it.
They did it in
That's
5 years.
ridiculous. It's so frustrating.
Yeah.
Wait,
people are going to be like,
can I get a breakdown of like postmortem on the Super Bowl? I want to know. I mean, everyone kind of knows. Okay, Super Bowl, like it just looks good. It looks like a 6 to 7 figure spend. But how do you? Everyone wants to know. What does it feel like? How do you start calculating? Like, does this make sense? And did we make money from it? What's your early read? And then what signals are you looking for down the road?
It was incredible. So there was a couple things, and also there was even kind of in Ramp fashion some things that made the buy particularly impactful and maybe a little more clever. So by buying the ad much later than most normal people would do, we had access to very unique inventory. Like it's sort of is a little insane to say 11 days before the Super Bowl. What if we did that?
Yeah.
And so as a result, we actually knew who was playing in the Super Bowl. We were able to find someone that had incredible relevance
That's
to
funny.
what people were watching. And
Yeah.
of course, Saquon is an amazing one-of-one talent. That was phenomenal. Next, there was, without getting too specific, a lot of folks that for various reasons would normally buy Super Bowl ads, insurers who had to deal with fires and other things like that that
Mm,
dropped out of the Super Bowl. Didn't want to be advertising at a time when we're sort of coming under attack, and it meant that some of the spots that we were able to get were in extraordinary slots. For people who were watching closely, we were the very last ad going in to the Super Bowl, and that was
Amazing.
nationally aired. For folks in other markets, saw the ad twice, and well, I can't get specific on the figures. It was a lot less than what people think, and the impact was a lot more. I think that Saquon, being a core contributor and having an extraordinary season meant that not only, was there a lot of coverage of him, but even the next week he was on the Today Show, and they talked about his story as well as our partnership, and the ad aired there, and we can see this in the metrics where February was, by many accounts, by far the biggest February that we've ever had. The
amazing.
acceleration just in terms of sales as well as people feeling like, it's gone from startup to, this company that I knew when is actually on this big stage. And so you can see it in the growth and just even in how people feel, how likely people are to recommend. And we've seen all of these go up.
I have a more personal question. You now run a $13 billion plus company. You're still one of the most kind and genuine people that I know. And it's almost most people, by the time they sort of climb the mountain to build a company this big, they get sort of hardened. What do you credit your ability to, your ability to sort of lead with kindness? And I feel like every conversation that I've had with you, but at the same time, sort of broadly, your sort of reputation, despite building such a behemoth in such a short period of time, that's broadly your reputation with anybody that I feel like interacts with the company. Where does that come from?
So one, I just think, we're thrilled to be here, but to show some humility. 13 billion is a lot. It's still very small in the grand scheme of things. We're competing directly with companies that have multi-hundred billion, if not almost trillion-dollar market caps. Some of the largest companies, today are call it $3.5 trillion. And the wild part, is that mathematically a company like, an Apple or Microsoft or Nvidia, talking to a ramp is almost like a ramp talking to a seed or Series A startup. It's actually those multiples in between
Yep.
valuations are about the same. And so in some sense, I think some of it just comes from the reality of we have such a long way to go. There's so much more to build. There's so many more people that we can serve, and just remembering that. I think that when you look at great companies in the past, often are killed by hubris. Arrogance, and forgetting like the reason why they were able to grow and get there
Right.
is there were people who early employees who gave them a shot and worked hard, who didn't have to be there, who were there, early customers who said, you know what, I'm going to try and trust you with my business, and please take good care of it. And that still is true. And so I don't know. I guess it's a little bit too like you grow up a certain way, and that those kind of things stick with you. But that's really how I think about it.
Right.
Did you want to get into any of the just general entrepreneurship questions or anything like
Yeah, I
that?
mean, I guess you've had your pick of the litter in the valley, right? At this point, I'm sure you've talked with every major, investor for, across different rounds, and obviously some funds get conflicted and things like that. What's a single best piece of advice you've ever gotten from somebody on your cap table? It could be, specifically on the investor side.
It's a really good question. I mean, I tend to really resonate with former operators, people who've built and run business. I think that experience it's fun, it's interesting, also times very
Turns out
solitary.
it's pretty valuable.
It's pretty valuable. Yeah, yeah, yeah. And so look, we have a very small board. One of the members is Keith Roboy, and I think that part of why I wanted to work with him even from the earliest days is um, I just think he had an obsession with what it takes to be a high quality operator. Like I still think his how to operate talk he gave over a decade ago is as good as it is. I think it's very underrated. I think
What was
focusing
the gist of that? It was cannonballs and barrels, right? Barrels and
oh
ammunition.
yeah, barrels and bullets.
Barrels and bullets.
Yeah, I mean, the idea is
Great
it's like you think
analogy.
about the bottleneck. You might have as many bullets as, but if you have too few cannons, you can't fire as many bullets. You need to have
Yeah.
more cannons to go quicker. But I think a lot of the heart of it, and some of this is like the score takes care of itself, but the idea that you manage towards the inputs to drive the outcome. And I think Ramp has been in this very large and in some sense, people look at it from the outside in hyper competitive space, and we've grown at a level others haven't. In part, I actually think is just by taking that advice to heart. It's really looking, upstream. What are the activities that lead to the outcomes we're trying to drive? What are the things I can do today that will save your business, time and money tomorrow? What
Yep.
are the things we can do today to drive more sales tomorrow? And so, in some sense, it wasn't, profound. It just was right, and we try to listen to it pretty often.
It's great.
Yeah, I feel like the best advice in the Valley is actually all out in these sort of blog posts or individualized talks. And in the same way on the company side, the Ramp secret plan is out there. It's like we're going to save businesses the most amount of time and money. And if you want to compete with us on that, you're welcome to. It's good for the world, but we're going to do it the best. So it's amazing to witness. And yeah, we'll have to have you back on in the very near future because if there's one thing about Ramp is there's always news coming.
Always news.
Can't wait, guys.
Yeah.
I really appreciate it, and look, thanks for having me on the show. And I can
Appreciate
say I
it.
knew you when. I think this is going to continue growing really quickly.
Oh yeah.
We're excited. We have Senra coming on in a couple minutes, I think. So
Yeah.
we're going to have him psychoanalyze you. Down,
Yeah, we'll let you go, Eric. We'll talk to you soon.
Talk to you soon.
Have a great rest of your day.
Cheers.
We'll talk to you soon.
Cheers. Yeah. Bye.
Bye.